Hi Team Value, JJ here, welcome back. Well, I've got some more Alibaba news today. I'm doing a video every day now so I can dig a little deeper into the stocks, the companies that I follow, and then some Alibaba news about their film and TV sector. You can see on Variety here, so it made the Hollywood press. China's Alibaba commits $640 million worth to Hong Kong film TV development. Let's see how they're reporting this news. Alibaba, China's e-commerce and entertainment conglomerate, said Monday that it is committing 5 billion Hong Kong dollars, that's $640 million US, over 5 years to the development of Hong Kong's film and TV industries. It seems like a big investment for over 5 years. We'll find out if that is. Just dive quickly into the Alibaba financials to see that sector, because it's a segment in itself, a unit, one of their business units. We'll see if that is actually a big commitment and why they're doing this. The move was announced at an event attended by Fan Luoyan. I hope I got that right, probably butchered it, sorry about that. Chairman of the CEO of Alibaba's Digital Media and Entertainment Unit. See, there's that unit. And Kevin Young, the Hong Kong government secretary for culture, sports and tourism. Obviously the Chinese government would probably really like this investment in local culture and national culture in Hong Kong. Alibaba's Hong Kong cultural and art industry revitalization program will focus on film production and distribution rights acquisitions, TV series production, and investments in concerts, collaboration with performance venues, and talent development. So pretty widespread within this entertainment sector here. It will also work with leading local film and TV companies to co-produce films for cinema, TV dramas, and dramas for streaming platforms. So yep, covering quite a lot of ground there. He also expects Alibaba's digital unit to make Hong Kong its second headquarters. Alibaba Pictures, a subsidiary that includes some of Alibaba's media assets but excludes the Youku streaming platform. Now let's see how it's reported from Alibaba. Hong Kong's TV dramas and events to receive Alibaba's backing for 5 years. Youku and Alibaba Pictures announced a slew of new projects in Hong Kong as well. Alibaba is sprinkling its stardust, so they're putting a PR on it here. I'm not going to be PR for Alibaba. We look at things critically because we're investors, and we see what's actually happening. I'm not going to pump Alibaba just because of the language here. Alibaba is sprinkling stardust onto Hong Kong's entertainment industry, the home of Jackie Chan and Bruce Lee movies, and a buzzing TV drama hub. Here we go. Youku, Alibaba Pictures, and other businesses in Alibaba's digital media and entertainment group will spread the funding across the Hong Kong-made TV dramas, events, training young people creatives in the city's cultural hub. There's definitely a big cultural narrative here, cultural investment as well as financial. The South China Morning Post parent company Alibaba owns the South China Morning Post. Can Alibaba's $5 billion plan put Hong Kong global stage? Industry players say it's possible. So this is like a revitalization, obviously, since the city's changed hands, and remember all the protests in Hong Kong and everything. So they'll be wanting to put a positive frame as a cultural center as well as a financial center. Alibaba Group's multi-billion-dollar plan to invigorate Hong Kong's culture and film sectors aims to thrust local movie productions back into the global limelight. But the city's competitiveness is in doubt, industry players have said. Alibaba's 5-year investment plan is a shot in the arm to Hong Kong's movie industry, which is suffering from an aging workforce. That's an interesting way of putting it. Hong Kong's Motion Picture Industry Association chairman said. So aging workforce, so they want to invigorate some youth into it, into the culture, into the industry. The investment will be focused on Hong Kong, not mainland China. They're making a point of saying that, making the productions truly made in Hong Kong. So this is really focused on Hong Kong, highlighting Hong Kong, highlighting local originality and creativity with a variety of genres. This will bring the city's movies back to the international spotlight, with creative work seeking to outshine projects in South Korea. There we are. So there've been some popular things from South Korea, TV and movies. So it's really about competition with South Korea. That seems to be a big part of it, reinvigorating Hong Kong when South Korea is doing so well with their drama and, even being popular in the US and other Western countries. If you're getting value out of this Alibaba episode so far, please remember to hit that like button to help the almighty algorithm to spread it to more people, because that's what we want. Thanks. Alibaba Digital Media and Entertainment Group announced on Monday that it would partner with notable Hong Kong and mainland companies to produce film and TV content, as well as nurture fresh industry talent. The plan, actually titled Hong Kong Cultural and Art Industry Revitalization Program. So there's definitely a government hand in this. Remember the crackdown that it had on tech companies? So this is probably a good look for Alibaba, being a big investment in the culture in Hong Kong. Now, this is Alibaba's Segments results, as I reported back in a video on their last earnings call. And we can see here the digital and entertainment group. So this is in RMB, and you can see that compared to other units there, obviously Taobao and Tmall, the China e-commerce still massive, and Cloud Intelligence Group there representing a big chunk as well. Alibaba International Digital Commerce, this is in descending order, the logistics arm, local services, and then we get to digital media, so not so material but still a significant chunk. And we notice the growth rates here, it grew by 20%. What was really disappointing in the earnings is that Taobao and Tmall is 6% growth for the 9 months ending December 2023. And only 3% growth for cloud, which was really disappointing. But some impressive growth in these other areas. So the international digital was 46% growth, and the logistics arm 27, local services 19, digital media and entertainment group. Not so material for the whole lot. So 16,000 compared to 341,000. That's in million RMB, by the way. So still significant, but quite a political thing as well. A positive political move for Alibaba here, I think. Now, if you like the content that I'm producing, if you're a regular, you might like the Art of Value Patreon. Over there, you can see exclusive content that I make just for there that I don't show anywhere else. I'll put a link in the description and the pinned comment to that, and see you over there. And just some additional news here, we can see that Cainiao and Geely partner to drive electric vehicle growth overseas. So partnering with electric vehicle company. It's not just electric vehicles, Geely. I think they have hybrids and other vehicles too. But they're making note here that this week, the electric vehicle unit of Geely signed a strategic cooperation agreement with Cainiao to join forces and explore more overseas markets. So this is their logistics arm, which we saw there is growing very well. 27% growth, so it's one of the strong areas of growth. So they're partnering with Geely to ship cars basically to international markets. Electric vehicles, or new energy vehicles as they're called in China, and that includes hybrids, growing in popularity. They account for a record 40% passenger cars sold in December 2023. That would include hybrids. Leveraging Cainiao's extensive logistics network, Geely will be able to bring these vehicles and parts to customers outside China. It adds that this is not Geely's first tie-up with Alibaba. Last year, the automaker announced a strategic partnership with the platform company to increase digitization across its supply chain. So working fairly closely with Alibaba, it looks, in that partnership. So it'll be interesting to see how that progresses. Obviously, the logistics arm going pretty well. Nearly 30% growth. This is one of the units that they are planning to IPO, which they're putting off. If you just saw that video I did a couple of days ago about them putting off the IPOs because market conditions, the market environment, not so good for IPOs. And not in the US either. I just saw Reddit is going to IPO, but there've been so few. And this is also the case in China and Hong Kong for IPOs, where they want to realize the full value by spinning off these units one at a time, but they're putting it off for obvious reasons. The chairman said so in that interview. Anyway, it's going to be interesting to follow this, the digital and media entertainment group, whether that grows over time. Obviously, a significant investment in Hong Kong and in competition with South Korea, obviously, because they're doing very well, have been in the last few years. So what do you think? Let me know in the comments where you think this is a good move by Alibaba to invest in Hong Kong. Well, is it just a political move, or is there a real investment here? It's known that investment in in movies and TV can be really hit and miss. If you look at Hollywood movies, they can be a flop and just lose. It's not known as a great industry to get money back on, but this is clearly not all about that, but it's still a significant investment. Let me know in the comments what you think about this investment by Alibaba. Now, if you're watching this episode on YouTube, I'm going to put a link here to my previous Alibaba video if you haven't seen that. I'm reacting to an interview with Chairman Tsai talking about Alibaba, the current situation, his thoughts on it, and how he's been buying back shares. And here I'm going to put a link to the video that YouTube thinks that you in particular should watch next. So go and see either of those now if you want to. I'll put a link in the description for others as well. Thanks to everybody for watching or listening wherever you are doing that, and I'll see you in the next one.